Indian markets near the high point of the day, bolstered by financials. The Nifty bank outperforms as Axis and IndusInd Bank both notch up gains. The mid-cap index is a relative underperformer in today's trading session. And Pharma Stocks slip after the US Justice Department's charge of price fixing by generic drug makers. Glenmark Pharma tells CNBC TV18 that it does not believe the evidence supports this claim. Auto industry sees a big pickup in June compared to May. Maruti reports 3-time jump in sales from last month. Tractor maker Escorts 2 reports a strong set of numbers with a growth of 64%. The management commentary is upbeat, while Eicher Motors reports very weak commercial vehicle sales numbers in June. And telcos in focus. Bharti Airtel ropes in Carlyle for a 25% stake in its data center business. And the shares of Vodafone Idea slide after reporting a weaker than expected operating performance. Not much headway from the latest round of Corp Commander talks between India and China. No significant troop reduction on the ground. Chinese troop concentration continues along LAC. Hello and welcome to Business Lunch. I'm Nigel D'Souza, and as we speak, the bulls have come to lunch, and they, having a good lunch actually, because you pull up the Nifty, we have moved to the high point of the day. We've crossed the 10,400 mark. We're holding around the 10,430 odd mark. So that's pretty good news that we're holding about those levels. A few stocks that are fighting for the bulls. Reliance Industries, that stock has spiked up, so keep an eye out on that one. The Nifty Bank as well is doing very, very well. And Mahindra, that stock as well has seen a bit of a spurt from the time the numbers came. The tractor sales numbers looked much better than what we were working with. And the street is taking note of that. So good times, at least as of now. Holding on to this 10,400 mark is something that the Nifty hasn't managed in the last week or so. A couple of times, we have seen selling from around this mark itself, 10,400, 10,420 odd. But let's move on then. Motilal Oswal has put out a list of stocks and how they performed in the past decade, which shows that returns are not assured. Prashant joins us to fill us in with his takeaway on all of that. Prashant.
This is just some food for thought. I mean, that's about it. And I think we've put this kind of data earlier as well. But, what is good always is good. And it's good to go back to some of this information. What we're basically talking about is stocks which are up between 20, 30, 40 times in one 10-year period and what they do in the next 10-year period. So the period in question is 2000 to 2010 and what those same stocks end up doing in the next phase, which is the next decade. This is the list. I mean, we're putting up 2 plates here: BHEL, SAIL, Bank of India, NLC, Siemens India, and look at the returns between 2000 and 2010. And as you can notice, I mean, predominantly, bulk of these were kind of the old economy names, from the industrial space, which saw that massive bull market starting 2005. But the third column there basically tells you that they were practically duds over the last 10 years till now. That is 2010 to 2020. After going up 36 times, I mean, BHEL is up is up 0.1 times. I mean, it's basically practically struggling to keep their head above water. All these names. Look at the other one as well, the next plate as well, similar kind of picture. Look at ABB India, Tata Power, BEL, L&T, Bank of Baroda, anything between 20 to 24 times, and look at what they've done in the next subsequent decade or so. And then we come to the more interesting question, and we can only pose as a question because we're looking at stocks which have done phenomenally well between 2010 up till now, 2020. And we're looking at these 10-year periods because we're also at the turn of a decade now in this year. And we could have added one more column at the end, 2020 to 2030, but that's a question mark, big question mark. Look at this. Bajaj Finance, Page Industries, Berger Paints, Eicher Motors, Balkrishna. Look at the returns over the last 10 years or so. And we'll put out 4 or 5 more names in the next plate and similar kind of picture. I mean, I think what Motilal Oswal was pointing out to was the narrative fallacy. We spoke with the portfolio manager, Susmit Patodia, who also basically emphasized the point that it's very difficult to poke holes in stocks which have done extremely well over a 10-year period. They seem infallible. But as it turns out, and as data shows, sometimes they're not so infallible. They are indeed actually fragile over the next 10-year phase. So the point being, I mean, the winners over the last 5-10 years cannot be taken to be granted that they will continue the performance over the last 10 years as well, however strong and unbeatable they may seem at this moment in time. Back to you guys.
Thanks so much for that, Prashant. Well, let's focus on pharma stocks. Like Glenmark Pharma, they're under some pressure on the US Justice Department charge of price fixing by the generic drug makers. Sonal joins it to fill us in with all those details. Sonal?
Thanks a lot for that. As you rightly pointed out, Glenmark Pharma is under pressure because the US arm has received a notice from the Department of Justice in the US that they are conspiring to fix prices for particular drugs. A lot of generic drugs also included in that. Now, Glenmark is allegedly conspiring with pharmaceutical maker Apotex to basically increase the price of cholesterol medication, that is Pravastatin, and other generic drugs, is what the notice from the DOJ says. Now, Glenmark spoke to CNBC TV18 and they said that they strongly disagree with the charge and the evidence does not support the claim. Now, do remember back in May, Apotex had pleaded guilty for the same suit by the DOJ, and they had paid around $24 million as criminal penalty. And Jeffries also said that they expect other generic players to come forward and settle this particular claim. This is going to be a negative read-through for Glenmark as well as the other generic players like Sun Pharma, Wockhardt, Taro, if Glenmark goes ahead and pays this penalty. However, they strongly disagree with that. But these are the other Indian companies which are also involved in this particular lawsuit. So we will really have to see how it really pans out going forward. But for today, it's a negative news for all these pharma companies. Back to you.
All right, just keep an eye out on some of these auto stocks. Mahindra & Mahindra has moved to the high point of the day, so keep an eye out on that one. The numbers look quite good. In fact, let's just hop across. Sonia's with us. It's the first of a new month, so she's going to be tracking all those auto sales numbers that are in till now. Sonia, over to you.
Well, you know, the big takeaway really so far is that the tractor segment has done very well. So both M&M and Escorts have reported good numbers, and more importantly, the management commentary is extremely upbeat. The other space which has done relatively well is the passenger vehicle space. So if you look at what Maruti has come out with, the June auto sales were slightly lower than what the street was estimating, but it's a big month-on-month jump that we have seen. So Maruti reported a total sales jump of 3 times in June to come in at 57,428 units. On a year-on-year basis, it's still a fall of 54%. Escorts reported very strong sales, total sales growth of 21%. Year-on-year, it was a 64% month-on-month jump. And the management said that they've seen unprecedented demand in this month. The industry is expected to grow significantly, backed by pent-up demand, a better normal Kharif sowing, better rural cash flows, more availability of finance to farmers. All of this put together has made sure that the numbers have looked good. Also, their production is back at 90% capacity. The only disappointment has been in the commercial vehicle space, and so far we've got Eicher Motors commercial vehicle numbers. There's been a 70% decline in Volvo Eicher sales this time. The sales have come in at 1,358 units versus Nomura's estimates of 2,000 units. M&M tractor sales, as I said, were also very strong this time, and the management commentary was positive. So the sum and substance is that the rural pockets have done quite well, whether it's tractor or even passenger cars that have a rural exposure, but medium and heavy commercial vehicles still under pressure.
Okay, all right, Sonia, thanks so much for that. Well, it's a good time to get in some market opinion. Then earlier today, we spoke to Lawrence Blanco of CLSA, who says that the market is likely to consolidate gains made since March. Let's listen in.
If you look at the Nifty chart, we've really had 500 points above and below that 10,000 area. And that 10,000 area, while it's a round number, it also dates back to the lows that you made in 2018. So we're essentially trading with 9,500 support, which includes the 50-day, and then up to the 10,500 resistance, which is 2019 lows. And as you said, the 200-day exponential moving average. I wouldn't be anticipating a breakout through the third quarter. The best case would be a breakout in the fourth quarter to the upside. But right now, I think you have to expect markets to at least digest and consolidate the gains that they've made off the March lows. So last night, we actually met our first upside target of 1,800, and that was from the breakout from the 2013 to 19 basing pattern we had been flagging. So we think there's still further to go after hitting that initial target, and our next target is up at 1,990 to 2,000. So we continue to recommend any pullbacks in gold as a buying opportunity. The trend is still strong then, and we think there'll be further gains even though we've met the initial target of 1,800.
Okay, all right. On that note, then we'll slip into a short break. You come back, we'll focus on a couple of telecom companies. Bharti Airtel did a deal earlier this morning, and also Vodafone Idea that's reacting to its numbers. We'll tell you a quick analysis on both those two stocks. Stay with us.